Dear friends, you are welcome to the third video of our series, Learn Finance and Accounting. In the second topic of the series, we have learnt about various type of accounts and what accounting treatment are they going to get. So just have a recap of what we have learnt in that topic is that there were five type of accounts. According to modern approach, there are five type of accounts: A, E, L, I, C. These accounts are divided into two groups. The first group is of A and E, second group is of Li and C. Now we had seen the counting treatment. When A or E rises or increases, the count is debited. When A or E falls or decreases, the count is credited. And the opposite happens in case of the second group, which is Li or C. When Li or C increases, it is credited. When Li or C decreases or falls, it is debited. The count is debited. Now, on the basis of this rules, this process, we are going to make journal entries. So, our third topic, the topic for today is how to make journal entries and how to record these transactions in a book called journal. So, recording of financial transactions is done in a journal. So, let us see a transaction. Mr. Rajesh started a business with cash of rupees 1 lakh. Now, Mr. Rajesh is a person who wants to start a business, and for starting that business, he is putting in 1 lakh rupees. He has opened a firm, and we have to make books of account for the firm. Say the name of the firm is Rajesh Trading Company. So we are making book of accounts for Rajesh Trading Company. Now this transaction, Mr. Rajesh started the business with cash of 1 lakh rupees. Let us analyze this transaction from the viewpoint of the business. Suppose we are making books for the business, then first thing that we have to do is we have to identify two things from the transaction, whether it is a cash transaction, whether it is financial in nature. Yes, it is. Then we have to identify the accounts involved. We can see two accounts here. We know that there are five type of accounts: A, E, L, I, C. A is assets, and the first account that we have identified is cash. Now, cash is an asset. I told you now, the whatever we have, whatever the company has, it is its asset. If it is having cash, then cash is an asset. So the first account that we have identified is cash. It is an asset. And second account, business is started with cash of rupees 1 lakh. And when a business and when a venture starts, the money put in that venture into that venture is the capital for the business. So the second account is capital account. First account is cash account and second account is capital account. Now on the basis of this, now on the basis of this, the two accounts, we are going to see what will be the accounting treatment being given to the two accounts. Let us see what is the accounting treatment that we give in for these two accounts. In the business, capital is coming in. Suppose earlier capital was 0. Now the capital has increased to 1 lakh. It has increased to 1 lakh. Suppose earlier it was 0. Now it is 1 lakh, and according to the rule, capital account will be credited. It will be credited by 1 lakh rupees. Remember, A, E, L, I, C. C is capital and it is in the second group. And in the second group, when capital increases, then the account is credited. So the capital account will be credited. What happens to the cash account? Cash was also in, it is in group A, group 1. So earlier cash in the business was 0. Now cash has increased to 1 lakh. There's there was a up arrow. In case of cash, when it was increasing, then the account will be debited. So cash account, when it is increasing, the account will be debited, and it will be debited by 1 lakh rupees. So I had told you, take a picture of this or write it in a on a sheet of paper, or you can click a photograph so you can refer to that again. Should I show you that drawing? Okay. So when A or E rises, account is debited. Now this is happening in case of assets and expenses, and cash is an asset. Cash is coming into the business, it is rising. It is becoming from 0 to 1 lakh rupees. It is rising, so the account will be debited. And the second account, which is capital. Now, capital, is it increasing or decreasing? It is increasing because capital is coming into the organization. Earlier it was 0, now it has increased to 1 lakh. So the account will be credited. Cash account will be debited and capital account will be credited. So that is what we have done in this transaction. According to this transaction, cash account will be debited and capital account will be credited. So the transaction will be, cash account will be debited and capital account will be credited. Now say let us try another transaction. Purchased raw material from Tarun with cash of rupees 5,000. Purchased raw material from Tarun for cash rupees 15,000. Now let us first identify the accounts involved. One, so we can say, see, cash. Second is raw material. Is Tarun an account here? No, Tarun is not an account. Why? Because this is a cash transaction. If this was a credit transaction, then Tarun would have been an account. Why? Okay, I will give you a small example. When you go to a shopkeeper and you say, okay, I want to purchase a notebook, give me a notebook. The shopkeeper says, okay, this much money you have to pay me. You pay the money, get the book, come home, shopkeeper takes the money, he is happy, he keeps the money in the drawer. Now, take another instance. You go to the shopkeeper and say that I require a notebook. Shopkeeper says this much money. You say I don't have money, I will give you money next week. Now, what does the shopkeeper do? He will ask, what is your name? Where do you live? So he will ask your details. Because this transaction is not a cash transaction, this transaction is a credit transaction. So whenever credit is involved, then the name of the person will be written. So then Tarun will become an account. But when cash is involved, Tarun is not an account. So what are the two accounts here? One is cash and one is raw material. What is raw material? Raw material is an asset. Whatever we have is an asset. Raw material, if we have raw material, that raw material is our asset. And second, cash. What is cash? Cash is again an asset. It can happen in a transaction. Both accounts can be asset. Both accounts can be assets also in a particular transaction. So what happens? What happens in this? Cash is going out of the business. Cash is decreasing or falling. When cash is decreasing, then the account will be credited. Cash account will be credited. And what is happening to raw material? Raw material is coming into the organization. Earlier we had no raw material, we had zero raw material. Now raw material is of 15,000 has come into the organization. So it is increasing, and when assets increase, the account will be debited. So raw material account will be debited and cash account will be credited. Okay, clear? Now let us go to another transaction which is returned raw material worth 5,000 to Tarun and received cash. So we had earlier purchased raw material of 15,000. Now from that 15,000 raw material we have seen that raw material of about 5,000 is not up to the quality. So we go to Tarun and we return that raw material. We don't require this. This is not of good quality. And we take cash from Tarun. Cash we take back. So what is happening there in this transaction? First we identify the accounts. What are the accounts? One is cash and one is raw material. Again, here the opposite is happening. Raw material is going out of the organization, so it is decreasing. When raw material is decreasing, the account will be credited. And when cash is increasing, cash is coming into the organization, cash is increasing, it will be debited. So cash account will be debited and raw material account will be credited. So we are going to write these transaction in a book called journal. So every book is having a format. So journal is also having a format. And in the format of the journal, there are four columns. What are the four columns? The first column is date, second column is particulars, third is debit, and fourth is credit. Now let us put the transactions in the form of a journal. Can we put? Yes, we can put. How? First, we have to write date. Second, we have to write particulars. Third, we have to write debit. And fourth, we have to write credit. Now, can we do this question? Mr. Nirmal started a business called Nirmal Trading Company. The trading company has done the following transaction in the month of January. Can we make a journal for this? Yes, we can make. Let us try. So the first transaction is that on 10th of January, the business was started by cash with a capital of 1 lakh rupees. Then the company purchased raw material. Some raw material was found defective, it was returned and cash was received back 5,000. So on 14th of January, 2,000 were paid to labor charges to Raghav. Cash was paid, and on 16th January, some finished goods were sold for cash of 30,000. So these are the five transactions given to us. Now let us make journal entries. So these will be the journal entries. We have put all these entries in the format. First entry, first transaction will be date. First column will be date, which is 10th of January. What is happening? Cash account is debited to capital account. See what happens is whenever a debit is there, we write that account number with the word debited. Second, capital account is credited. So we don't write the word credited, we write prefix to. Cash account debited to capital account. 1 lakh each. Then we write a small narration. Narration is written. It generally starts with being, word being. So any other word can also be used, but generally the word being is written. Being cash amount received from Mr. Nirmal as capital. Amount debited is 1 lakh, amount credited is 1 lakh. Similarly, we have second transaction raw material account debited to cash account 20,000 each. Third transaction, fourth transaction. Now let me tell you about this transaction. Uh, labor charges of 2,000 were paid to a laborer known as whose name is Raghav. So will Raghav be written as an account? No. It is a cash transaction, so Raghav will not be written as account. Cash account will be written. And the last transaction is where we have sold some finished goods. So cash is coming into the organization. So cash account will be debited in that case. Goods account will be credited. Here we can also credit sales account. When we purchase raw material, we can call that purchase account. When we sell something, we can call it sales account. But actually, what is involved? Actually, goods are involved. Raw material is also inventory or goods, and finish material is also inventory or goods. So the transaction becomes cash account debited to goods account for 30,000. So this is how we make a journal. This is how we make a journal. So that's all for today. We have made a journal. We have made a journal, and the transaction. Every transaction is having two accounts. But can it be possible? Now a question comes: can there be a transaction which has more than two accounts? Can you think of such a transaction? Yes, there can be such a transaction. How? Okay, let us take an example. There's a factory owner. The factory owner has an account in a bank. So he goes to a bank. He says, I have 100 workers. So New Year is coming and I want to give them all a gift of 1000 rupees. So take 1 lakh rupees from my account and put 1000 in all the 100 accounts. 1000 each. So on the left hand side, on the debit side is also 1 lakh, on the credit side is also 1 lakh. Amount is the same on the both the sides. But one transaction and accounts involved how many? 101. 100 workers and one owner of the factory. So 101 accounts are involved. So this means that number of accounts involved can be more than two also. More than two also. Now let us see a transaction where there are more than two accounts. When there are two accounts, the transaction is called simple transaction. It has only one debit and only one credit. Debit leg and credit leg, both the legs are called patterns, parts of the transaction. But it is possible that there can be multiple debits or multiple credits. While the contra patron is single, that type of transaction is called compound transaction. Now let us see another example. Suppose that company, only Nirmal Trading Company, wants to purchase raw material. The seller of the raw material says that if you want raw material to be sent to your factory, there will be transportation charges of 500. So the manager of the factory has gone to the vendor of raw material and says, okay, give me raw material for 10,000 rupees. But send the raw material to my factory. Seller says, if you want raw material to be sent to your factory, then I will have to engage a truck, and for engaging that truck, I will have to pay 500 rupees to him. So give me 10,500 cash. I will send you raw material of 10,000. 500 will be charges. So this transaction is a compound transaction. It has more than two accounts. What are the accounts? The first account is raw material. What is happening to raw material? Is it coming into the organization or going out of the organization? It is coming in. It is coming in. This means it is increasing. Up arrow. So raw material account will be debited. Transportation. It is an expense. Earlier, the expense was zero. Earlier, there was no transportation expense. But now, transportation expense has increased to 500. So, when expenses increase, they are debited. And cash is going out of the organization, so cash account will be credited. So, this is what? This is a compound transaction. This is a compound transaction. So, that's all for today. If there is any question, any query, you can write it in the comment section and I will try to answer that. If there is any query or question you want to ask, say I have tried to explain in a very simple language. So I hope you liked the method and you liked the video. The topic that we have discussed is recording of a transaction in a journal. That's all for today. So please like and support our our venture, our this project of teaching finance and accounts. We can be supported, or you can support us so that we can continue making such educational content by using this QR code. You can support us. We'll meet again with a new topic, which is making a ledger or classifying the transaction in a ledger. So we will meet again. Till then, bye and take care.